So we are seeing the reaction in the markets. Is that because this could make sense?
You know, this has been an idea that's been out there for a while, right? Kraft Heinz, the belief is they have to do something. They need another deal. They got spurned by Unilever. So we're starting to see those names trickle out again. General Mills, Campbell, Kellogg, Mondelez. You're going to see rumors about all of these because the feeling is Kraft Heinz has to do something. And these companies have struggled a bit. So there was a story, obviously, out in the New York Post saying that they're interested in Campbell. Hard to say whether there's much substance there. I mean, there's some reasons why Campbell's a very tough acquisition target. There's a lot of inside ownership on the company, family controlled. So the family would have to want to do it. And Campbell's also kind of small for Kraft Heinz, to be honest. I think the market cap is 13 billion, something like that. So feeling that Kraft Heinz needs something a little bit bigger to really do what they want to do.
Yeah, and Craig, obviously people are trying to now analyze something that may not even be happening, but some of the analysis I've seen around Kraft Heinz is another big deal that would layer on more debt would not be a good thing, but if they were going to do it, a target like this that's seen as fairly weak right now would not be something that investors would welcome. Does that kind of make sense to you, that equation?
It does, and I think just the size of Campbell really is the big question there. I mean, Unilever was a $140 billion deal, and the feeling was, okay, Kraft Heinz could then take over that, start to cut into some of the fat, reduce the cost. That's what they want to do, something big, transformative. Campbell's is a small company that has big problems in their core soup business. So, and also the fact is that it's not a ton of international exposure. That's the other thing that people believe that Kraft Heinz wants, is somebody that sells stuff overseas. Campbell is mainly a U.S. business.
Kraft Heinz is down, what, $50 billion in market value. Why does Kraft need an M&A right now?
The feeling is that the way that company functions, you know, these guys got together, 3G Capital, the private equity firm, got together with Warren Buffett. They bought Heinz in 2013, cut the costs, got the margins up. Then they bought Kraft basically 2 years later. So 2 years after that was the Unilever deal. There's this feeling of they want to buy things, combine the companies, and cut rather than really organically grow sales. And now it's been, 3 years since that company was created. And the feeling is that they really need to do something to get back to what they're best at, which is reducing costs and improving margins. And they're kind of, the Unilever thing was a major sort of stumble for them.
Yeah, Craig, and of course, Canadians know the story well because one of the first moves 3G did was to pull out of the Canadian processing market for tomatoes in order to cut costs. A little bit of bad PR, not lasting though. But in terms of what they might be doing, how much of an effect are trade wars on a company like this with international supply chains and international inputs?
That's a great question. It's obviously very top of mind right now. I mean, I think the food makers have been insulated from it to a certain extent. You do look at a company like Campbell, that's mainly a U.S. business. I mean, Kraft Heinz, I think, is more than 70% or right around there in the U.S. So we haven't really seen the trade war concerns show up in the food world. It's more of a commodity story, and autos, obviously, other things. But for packaged food, it hasn't really showed up there too much to this point. And you're right, though, that the world has changed since they went after Unilever, and whether that changes their thinking is a great question going forward.